Today, we are going to talk about planning across multiple market cycles, the only way to stop being pushed around by the crowd. If you treat crypto investment like a one-time gamble, the market will punish you. If you treat it like a system, the market becomes something you can navigate. Crypto does not move in a straight line. It moves in seasons. One season feels like a party, where everyone is a genius. The next feels like winter, where people disappear, uninstall apps, and swear they are done forever. Most losses happen because people change their behavior with their emotions, instead of changing their plan with the cycle. Crypto does not move in a straight line. It moves in seasons. One season feels like a party, where everyone is a genius. The next feels like winter, where people disappear, uninstall apps, and swear they are done forever. Most losses happen because people change their behavior with their emotions, instead of changing their plan with the cycle. I use a simple model. 4 phases, repeated again and again. Phase 1, capitulation, panic and surrender. Phase 2, recovery, the market starts breathing again. Phase 3, expansion, the big trend, the headlines, the excitement. Phase 4, distribution, the dangerous, beautiful-looking period where risk quietly explodes under the surface. In capitulation, your job is survival. That sounds boring, but survival is a strategy. You keep a large part in stable or cash, and you add exposure slowly, with discipline, mostly in strong core assets. In crypto investment, trying to be a hero at the bottom is how accounts disappear. In recovery, the market begins to heal. It is not euphoric yet, but it stops feeling hopeless. Price starts building higher lows, and the worst stories fade. This is when disciplined people start getting rewarded. You can reduce some stable, build core positions, and only then consider a small, carefully selected alt basket. In expansion, everything becomes loud. Narratives spread, screenshots fly, and people start confusing luck with skill. Yes, this phase can make money fast, but it also destroys discipline. The key is to separate your portfolio into 2 parts: core holdings you can defend, and satellite positions you trade with rules. Satellite can grow fast, but it can also evaporate fast. Here is the rule that saves you. Take profits in steps. When a position is up, you do not wait for perfection. You scale out. A little at 30%, more at 60, more again at 100. You turn screen gains into real gains and move them back to stable or into your core. That is professional crypto investment. Boring actions, powerful results. Distribution is the most dangerous phase because it looks wonderful. Prices can still pump, especially the last wave of excitement. But leverage gets hot, funding spikes, and low-quality coins act like champions. This is where you reduce risk, not increase it. You lighten alts first, raise stable, and keep your ego out of the decision. How do you identify the phase without drowning in indicators? Keep it simple. Watch price structure and the long-term trend. Watch liquidity conditions and the macro wind. Watch flows, coins moving to exchanges, stablecoin activity, signs of profit-taking. And watch sentiment and leverage. Fear versus greed, funding rates, open interest. You do not need certainty. You need a probability that guides allocation. Now we make it operational. Rebalance on a schedule and by thresholds, weekly or bi-weekly in hot markets, monthly in cold markets, and anytime your allocation drifts too far from your target. And set a kill switch. If your portfolio drops 12% from a recent peak, reduce risk. If it drops 20%, go into defense mode. Core plus stable, no emotional trades. I want you to leave with one promise. From today, you do not invest by daily feelings. You invest by cycle, by rules, by review. Ask every week, what phase are we in? What is my risk level? And what is my one clear action? Do that, and you will be able to survive, learn, and climb from cycle to cycle. That is crypto investment done the right way.